Hello and welcome. My name is Oliwia and I'm a VP and Research Director at Forrester Research. Today I want to talk to you about how you can embark on an end-to-end digital transformation and what that means in financial services. Firstly, of course, I have to start with COVID-19 because it continues to be top of mind for all of us. It has really disturbed all of our plans in the last year and continues to dominate agendas for the year ahead. That said, in financial services, I think COVID-19 hasn't yet caused a real revolution. It simply accelerated some existing trends. For instance, when it comes to customers, we already saw that decreasing customer trust in traditional institutions and increasing trust in non-traditional players such as fintechs or tech titans like Google, Amazon, Facebook, or if you're in China, Baidu, Alibaba, and Tencent. Those competitors that I have mentioned are also becoming the non-traditional competitors to financial services, which means that the stage that financial firms are competing on is at the moment global. And that global competition means also that the situation is becoming much, much tougher for financial services firms. And we're also seeing this fragmentation of the value chain, which means that people need to really think about when they enter their financial products in the journey that customers are going through. So that's on the side of the competitors. In terms of economics, we do see this long tail impact of COVID-19. We are expecting a big rise in the number of defaults and also the types of products that customers will be buying. And of course, decreased interest rates will also mean that there will be even stronger pressure on existing deposit business models because financial services firms are struggling. And in terms of regulation, we also have open banking that is leading to open data and open finance, further putting an acceleration into experimentation with different business models. And lastly, already before COVID-19, we saw this focus on sustainability. And now governments and companies are thinking about it even more as they're trying to build back better going forwards and thinking about how they can contribute to a better future for us all. So as I said, COVID-19 hasn't actually changed all of these priorities, but it has accelerated them going forwards. That means that, of course, financial services firms' business priorities are also changing in response. So we're actually lucky because we conducted a survey of financial services business and technology decision makers just before COVID-19 kicked off, so in December 2019 and January 2020, and then later in the midst of it, April and May 2020. And we saw this drastic change in priorities. So before COVID, firms, the top 5 priorities were really about growing revenue, about improving the experience of customers, reducing cost came third, and then of course improving products and services and better complying with regulations and requirements. 4 out of these 5 priorities have lost on importance since COVID. So instead, what's come to the top, we have this huge focus on cost reduction as companies scramble, as I mentioned, with a much greater pressure on their profitability. Growing revenue has gone down to number 2. But there are 2 things that have appeared on the list that weren't there before. And that is the focus on the ability to innovate, with firms trying to use the crisis to really improve their innovation abilities, to use it to leapfrog their competition and make the most of this changed environment. So that's one of these. And a second priority that also suddenly appeared in the top 5 is accelerating the shift to digital business. So this is precisely the stronger focus on digital transformation and making the most of technology in these vastly different economic and social conditions. The world, of course, continues to move, and in order to survive and thrive, I think we can all agree that the only things that firms can do is to embrace that end-to-end digital transformation. So what does that really mean? I think that going forward, firms will need to deliver on three ambitions that they will need to prioritize in the next few years. And those three are customer experience excellence, zero back office, and adaptiveness. So let me talk to you and tell you what I think these three things are and why they matter so much. So firstly, customer experience. So Forrester believes that we are in the age of the customer, where customer obsession and that understanding of customers is the main source of competitive advantage. Unfortunately, in financial services, we don't see all that much customer experience excellence. So Forrester runs its Customer Experience Index. It's a study that measures the quality of customer experience across different brands. So we've just run this study in 2020 to look at the quality of experience of top brands in Europe, US, and other markets and see how companies are doing. And actually, I've brought to you here a particular index. This one is for auto and home insurers in France. And as you can see, actually, the vast majority of these brands are not doing all that well. In fact, only 2 European insurers deliver really good experiences. In this case, you have basically the majority delivering okay or even poor experiences. So there isn't really a great deal of differentiation. And that means that customers themselves also don't necessarily know who to go with in order to have a better quality experience. And there's plenty that firms can do to change that. That's also because customers' expectations are going to be changing, and they have changed as a result of COVID. So we've asked customers how their behaviors have changed as a result of COVID-19. And we see a vast amount of difference in terms of, for instance, what sort of financial activities they conduct and how they conduct them. So this particular chart shows you the adoption of digital channels for a variety of financial services activities. For instance, we see that a number of digital laggards actually accessed their financial accounts online on a computer for the very first time. This goes from a relatively low 12% in the US and the UK to as high as 20% in Italy. Even some activities that firms traditionally say customers prefer to do with a person over the phone or in a bank branch, they are actually doing for the first time online. So for instance, filing an insurance claim has increased over this period. We see a number of insurers reporting that a lot of customers are filing their claims online, something that they traditionally would have done over the phone. And even as complex an area as purchasing and opening new financial products, where again we often see that customers maybe would have liked that reassurance from a person, actually as many as 12% of online adults in China actually opened a new financial product online during COVID-19 pandemic. So what does that mean? We've actually seen that most of the customers have had positive digital experiences with their financial activities. So that also indicates that there will be a change of behavior and customers will be relying on their financial services providers to provide more of those experiences online and delivering great experiences going forward. Many firms think they've done digital very well already because they might have a mobile app or they might have a web experience, but actually that's often just scratching the surface. So think about all the different activities that customers can do, and a lot of that digital experience will actually rely on great digital operations. So things like real-time underwriting, automated fraud detection, claims processing, faster payments, identity verification. All of this really feeds into how customers perceive their interactions with a brand. So when companies tell us that they've updated their mobile app, we often say that this isn't enough because the quality of the experience, let's take a claims experience, will really depend on what happens in the background, often in the back office, what sort of data insurers receive, how quickly they can process it, how quickly they can make a decision, how quickly they can make a payment. So all these different functions that may not be customer facing actually have a tremendous impact on customer experience overall. So think about how you can go about changing this. We often recommend that financial services firms start with a customer experience journey map. Let's say the experience of claim, as I mentioned earlier, and then they have to use that as a tool to see how the wider company ecosystem impacts that journey. Claims officers, loss adjusters, and so on. And that then leads to thinking about what sort of changes they need to make across people and data and process and technology, so across all of their operations, in order to deliver that great customer experience. So this is the complexity that I think eludes a lot of financial services firms, and why the quality of the experience is maybe not the best, even despite all the investments made in digital channels. The other thing that I always hear is about automation, and whether automation, if we embrace full automation, whether that will deliver a great customer experience. Well, I often respond that full automation at the moment is neither desirable nor yet achievable. So what we recommend is actually this vision for zero back office, which is a strategic plan that leverages methods, technologies, and architectures to make back office operations more efficient, more seamless, and more automated. So it's a strategic plan, it's more than just an ambition, but it also recognizes that we are not really there when it comes to full automation, but what you are trying to achieve is definitely greater efficiency, more seamless experience, and more automation. Zero back office is also not just about a single technology. It is a combination of methods like design thinking, for instance, redesigning that experience. Technologies, certainly automation technologies play a role here, but also architectures. So how data flows, where capabilities reside with companies, and so on. So it's a really complex ambition that hopefully you can move towards going forward. Certainly, there are a number of technologies that can help companies with intelligent automation. So at Forrester, we've actually mapped all the different technologies that play a role in intelligent automation. And we plot them on this 2x2 axes, where the y-axis basically focuses on business value, from high business value to low business value, and the x-axis focuses on maturity. Low maturity versus high maturity. And that helps us understand how companies should be approaching all these different technologies, whether they should be just experimenting with this, as for instance RPA-based employee robots currently are in the experimentation phase, whether they should be investing in some of these technologies, such as for instance process mining, to understand the types of processes that you can automate, whether they should maintain the overall investment or even consider divesting from some of these technologies. So as I mentioned, while full automation is neither possible nor desirable, you do need to have that strategic plan that includes technologies on how you're going to move forwards to making your operations more seamless, more efficient, and more automated going forwards. And I've hinted that technology is not the only thing that you need to be worried about. In all of our research on automation and back office, we understand and hear from companies that actually it's often their culture that is holding them back. And that culture of being risk averse, being quite traditional, can really change your transformation and make it very, very difficult. So we recommend basically this vision of becoming future fit for a very, very uncertain and very, very changeable future, where you need to really have that resilience and creativity and adaptiveness so that you can adapt to whatever is coming your way, and also build your operations in a way that allows them to retain the resilience despite everything that might happen. So we've obviously experienced COVID-19, but the next issue might be climate change, and therefore that focus on resilience is very, very important and probably beats other things such as operational excellence, and just kind of the speed, because it's all about how well you can respond to the changing environment. So I hope that has given you a good sense of how you need to adapt going forwards. Let me give you a definition of what we mean by adaptive enterprises. As I mentioned, it's about anticipating tomorrow's customer and employee needs today, and then proactively reconfiguring themselves, including their business model, to meet customer and market demands. So this means really looking forward rather than backwards, and being prepared to really change everything about yourself, whether that's your business model, your product set, or operations, and how you deliver value to your customers. So a very, very, I think, different vision for what a company should be and how it might succeed going forward. So just to come back to my initial opening line about why it's so important to embrace end-to-end transformation. It's important because you need to really fend off new competitors. So I mentioned CX excellent, zero back office, and adaptiveness. And actually, you already have new types of competitors that do very well across all of these areas. So in CX excellence, we have one of the challenger banks, Monzo, for instance. That was one of just 2 European banking brands that achieved the excellent score in Forrester's customer experience index. And they do that through their commitment to customers, through their focus on financial well-being, and through those smooth operations. So Monzo is a great example of CX excellence. When it comes to zero back office, we've got Lemonade. And Lemonade is an insurtech that has scaled tremendously in the last few years. And what they do is they actually run this automation index. And the automation index measures basically how many customers there are to staff numbers. And when they started back in 2016, I think it was just 96 customers to 21 staff members. So the automation index stood at 5. By 2018, they only had 100 team members, so they didn't grow all that much. But those team members would support 250,000 customers. And so the index stood at 2,500, and they continue investing in automation capabilities to ensure that they stay ahead of incumbents and traditional competitors. So that's how they kind of achieve that zero back office vision. And lastly, on adaptiveness front, we have Oak North. So the SME banking, small business banking lender in the UK. And what they've done is that they adapted very, very quickly to COVID-19. They actually produced a COVID vulnerability rating framework that uses proprietary subsector-specific COVID-19 data and stress scenarios to enable lenders to re-underwrite some of their loans and to constantly monitor the quality of their loan book to see how risks might impact their portfolio going forwards. So these 3 companies, I think, there are 3 new types of competitors, but they really show how much you need to change across these 3 areas: customer experience excellence, zero back office, and adaptiveness, in order to succeed in the future when you compete with new types of challengers. So I will close with that. Thank you very much for joining me today, and have a wonderful rest of the conference. Thank you.